Thank you, Veronica. Please press got it. We are recording these meetings to make sure that we can post them on the website for those folks who are interested in the topics, but they're unable to participate during the live sessions. And lastly, we have a survey that will show at the end of a QR code to the survey that will show at the end of the workshop. Please fill out the survey when you get a chance. We want to make sure that we are providing content of value to you. So providing survey responses will definitely help us do that. Next slide. So I mentioned the Tyler Supportive Services Group. They are providing technical assistance to businesses who are registered with TDOT to do business with TDOT, or if they are just interested and they'd like to find out more information. The Tyler Construction Engineers Group, they have a group of subject matter experts well-versed in a lot of the topics that business owners need to know to make sure they're able to do business with TDOT. These are some of the topics on this slide. I won't go over all of them, but if they do not have the answer to your questions, they are well-resourced and can find answers to your questions. So please feel free to reach out to Victor on his website, on the Tyler Construction Engineers website, and fill out the intake form, and you will be directed in the appropriate manner. Next slide. So who's the Tyler Construction Engineers Group? The people who represent Tyler Construction Engineers are subject matter experts in accounting, cost estimating, QuickBooks, payroll, human resources, and other topics. The group is led by Mr. Victor Tyler. And Victor will be leading the workshop for today. We also have on the team Mr. Marshall Tabb. Marshall, there he is. Mr. Curtis Webb is the marketing guru. I don't see Curtis, but I probably can't see him on the screen. Mr. JB Mercer, you heard from JB and Sandra and Marshall last week. We also have Ms. Teresa Daniels. She is the HR guru, and I am heading up the business engagement and trying to make sure we do as much outreach to DBEs to make them aware of the different opportunities that are available to them. Next slide. The hallmark of the supportive services that are provided through the Tyler Construction Engineers Group is this concept of the 5 B's of project business. And all of the workshops that we are providing to you over this 10-week series, they are based off the 5 B's of which includes business development, bidding, building, billing, and banking. So each week we will go take a deeper dive into each one of these topics, and you'll get an opportunity just to get a taste of the information that's available to you. But all of it is very relevant to make sure that you grow your business. Next slide. Again, we are on week 5. Weeks 1 through 4 are already on the Tyler Construction Engineers website. If you go there and if you need any resources from the previous workshops, please feel free to go there. But week 5, we are talking about markup, overhead, and profit. That's something that's extremely important to small business owners and just to businesses in general. So this topic should be of interest to a lot of people. We will have over the next 5 weeks, we will continue this series up until the end of November. We hope you're able to join us for most of the rest of the series. So with that, we're going to turn it over to Mr. Tyler, and he will talk to you about markup, overhead, and profit. Thank you, and take it away, Victor.
Okay, I need screen sharing.
You should have it.
I got it.
Yep.
It's showing.
It's not showing yet.
Okay, all right. Let me. Okay, it finally popped up. Okay, I got it. Now it's showing, right? Is it showing now?
Yes.
Okay. Okay. Good morning, everyone. Thank you for joining us and spending a little bit part of your day with us. We're going to have a quick glance into calculating overhead, markup, and profit. This is a subject I know that everyone has asked me about over the years of how to properly do it. And again, this subject takes time. This is going to be a brief overview. And so as we go through it, you can take some notes, but you can refer to the recording later on. And if you are certified through TMUCP and your firm is certified through uniform certification, you can call us and set an appointment and we can work with you on this. And one way to do that is to take part in the, to fill out an intake form that's on my website, and we'll talk about that a little later. So this is a workshop that you really don't need to relax in. I was going to say sit back and relax. No, stand close to your monitor. I know you might have a lot of questions, and so write them down, raise your hand, or put them in the chat, and someone will look at it and answer your questions or let me know what they are. Okay. Tanisha kind of went over this. This is the 5 B's for project-based businesses. And as we said before, project-based business is contractors, architects, engineers, consultants, lawyers, accounting firms. They drive on project, getting the project, whether it is constructing the project or it is a service, it doesn't matter. They're survived by project. Where we are is in B2, the bidding part. We are in the bidding part. And last week when they were talking about job costs, which is very closely tied to what we're going to do today, and you'll see why it's very much tied to it. We were in the B4 part, which is billing, which is talking about job cost accounting. And you see all these B's: business development, bidding, building, billing, banking, all drive profit. They all drive profit. And we'll show you how that, that is done. If we, let's start here. In the business development and bidding and proposal development part, which we're talking about, we did cover the bid, no bid some time ago. Now the estimating part, we are not talking about labor, materials, equipment, subcontractors, or other direct costs. Right now, we're looking at job and office overhead, which lead us to talk about bid markups and profit determination. So in this B2 portion of the 5 B's, these are the things that a small business should be concentrating on. And of course, each one of these are workshops in themselves. So what is this about? We're going to try to demonstrate a profit planning process so you can not leave money on the table. And so I'm going to guide you through, like I said, it's an overview of calculating your overhead and your profit. Now, if we get enough responses for this, we'll probably have an in-person workshop probably later on in the spring to really go through this. Most of the clients will work one-on-one. You remember this slide from last time I spoke. In order to have a successful company, you need to have successful projects. And so you say, well, that's, that's easy to say. That's nothing spectacular about it, but it is once you start thinking about it. As we go through these slides, you kind of understand what I'm trying to get to. All right, how much profit markup? I get that question. I'll say, how much do I mark up a project? Well, before we talk about markup, let's talk about markup and project, and profits are tied to the risk of the project, the duration of the project, the type contract it is, the number of bidders, your experience on doing that type project, and the project supervision. Marshall and JB and Sandra last week was talking about job cost, and job cost is, if you set it up properly, it will even tell you which foreman or which superintendent is the most profitable and which is the least profitable. If you set your books up correctly, it could tell you that. The influences on profit, the profit can be anywhere between 5% to 45% to even more than that. And it's dependent. Now, office overhead, home office overhead, which some people call general administrative expenses, that G&A. G&A has to do with your administrative efficiency, the management of your company. That has an influence on your markup. How you set your company up. Everybody sets their company up different. Some of them might set it up different, but the costs behave different. It influences your markup. Contingency of a project is a risk analysis that the owner needs to do on each and every job they bid on. There's some inherent risk that you need to account for in some way. But one of the things when you are in this project business environment, the contingency should be the least amount of percentage of your markup, unless you're doing very risky work like environmental type work or major remodels. Major remodels have inherent risk because once you tear down a wall, you do not know what's behind it. So you need to account for that. But in any other circumstances, that contingency should be low, because when you're bidding, you should try to capture all your costs as much as you can and not have percentages to make up what you don't know. We'll talk about that. And then the profit. The profit is off to itself. It's part of the markup, but profit has to do with your company strategy. What do you want to make? 1% on a job, 2%, 10%, 20%. That's up to the company owner. And we'll talk about where, when you think about that profit, as you look at it, is going to involve these things as a company owner. Is it risky? What's the duration? Is it what type of contract is it? The number of bids? All that goes into this profit determination here. It is not a mathematical formula. This right here is not a mathematical formula. These others are. Now, we always say this. You can maximize profits by knowing and understanding your cost. You can maximize your profits by knowing and understanding your cost. So the biggest thing about markup is this last word here, cost. And so how do you improve your company profits? Well, you got to know your costs, understand your costs, control your costs, track your costs, and make continuous improvements to improve profits. Now, knowing your costs is the estimating part of bidding. Understanding your costs is the bidding part of how your costs behave. Controlling your costs, that is when you're on the job site, are you doing the project, is controlling that cost. Track your costs is the job cost accounting part, which, like I said, Marshall, JB, and Sandra talked about last week. And then this last thing about making continuous improvements, that's you are reviewing your results on a very frequent basis so that you can make adjustments in your estimating, in your bidding, in your project management, and your job cost accounting software will tell you how to do that. So the biggest thing about improving company profits is understanding your costs. Here's a notable quote. Successful contracting organizations know finance. Successful contracting organizations know finance. One interesting fact that I usually tell people when I read reports and studies about the construction industry, it's a fact that in the most successful small businesses that are in the construction industry, the owner's background is not construction. It is accounting. The most successful small business in construction, the owner's background is in accounting. Now that should tell you something how important accounting is to the construction industry. So what I'm talking about today is particularly construction financial management. Know your numbers. And I know people look at this, and when we talk about financial management and accounting, this is the look that most owners will give, because we do not spend an adequate amount of time understanding this financial management part. Well, let's do a brief overview of what we do before we get into the calculations. One of the things that we have to go through is this. Every company should have a budget. Even if you do not have a history, you got to make forecasting a part of that budget. If you got a lot of history, 3 to 5 years of accounting records, you can probably do pretty good in creating budgets. If you don't, you have to forecast, and you have to probably reach out to outside assistance for that. And that's one of the things that TDOT has in this DBE supported services. There are people that are on our team that can help you do that. So you have a company budget, and if you are going after jobs, you'll have a job estimate. If you are awarded the job, you'll have a job budget. As you are building that job, you will control your project with job costs. If you control it properly, you will have job profits. If you have jobs profit, you contribute to cash flow. If you have cash flow, you will have company profits. If you have company profits, you will be able to make investment and grow wealth. All this is tied together, starting with your company budget and going after profitable jobs and doing accurate estimates with the proper markup. I showed this chart last time I presented when I was talking about, we were talking about bid, no bid, and understanding when to bid, not to bid, and being able to afford to bid. And I show this again because what has been found in studying construction firms over the years is that this effect of negative monthly cash flow. Now, when you start a project, you're spending costs. You got a lot of costs. A lot of things are being spent, especially the labor. You got to pay the labor on a weekly basis. You have to buy material. You probably have to have equipment. If you got subcontractors, they got to be paid. As well as the labor burden, which is payroll taxes, that has to be taken care of. Now, while this is going on a monthly basis, you have to be able to pay these things. And if you're not paid in a timely manner through the contract, you got to have that money from somewhere. And so that's where it comes down to this the effect of cumulative cash flow on a project is negative, probably for quite some time in that project. If this was a company for 1 year in the construction industry, it shows that a construction company usually will become profitable in the month of September or October. Usually in the month of September and October. And look, in this particular project, look what it's already done to this particular company. If they did not have money to finance this job, they are in $344,000 in the hole. And so I had a slide that says the only thing worse than losing money in business is losing money and not knowing. This particular cash flow chart, by not understanding it, have ruined most small businesses because they didn't understand financial management. And that's why I brought in the second chart. If you had the available working capital that equal to the negative outflow, this 344,000, if you had that as available working capital in the bank, now cumulative, now during the month, you might have negative months, but cumulative, you're not feeling anything. And so I put this up because what becomes very important is this home office overhead and the profit that you are trying to achieve at the end of the year. If you don't have the proper markup, this working capital will come from what you thought was a proper markup and you end up with nothing, or you end up paying for that job. And so all the things that we're working on today is just a starting point to understand this chart here and to make forecasts as you're going forward so that you're not suffering and having stress on doing business. And so here we go. What is the first rule of business? I'm glad you asked. Cash is next to oxygen in important. That's the first rule of business. What is the second rule of business? I'm glad you asked. Don't run out of cash. And so this markup and these understanding overhead and understanding costs and how they behave and interact is very, very important to a business. So this whole thing, especially about markup and profit, is about creating processes that can be measured and can be predicted. And if they are favorable, we want to repeat it. Now, this is another slide we use often in our consulting, is why we go through this process, because we want to measure what we do. And we want to make corrections. And once we find that it is profitable, and it's predictable that what's going to come out, we're going to repeat it. And so it becomes part of your policy and procedures of doing something. So in a project-based company, and I go through this before we get to the calculation, because I want you to understand that the project-based company has marketing and sales. This is kind of general, marketing, sales, or estimating, what you want to call it. Then you got the operation, then you got the finance. Under operation, you got a project manager, and you got lead persons working on different projects. Well, each one of those boxes, it costs. It's a cost that occurs in each one of those boxes, and it has to be accounted for. We know that if you do not have a job at all, guess what? These blue boxes still have to be paid for. How do you pay for these blue boxes? That's your overhead. Your overhead is occurring here. Your job cost, as we were talking about, your job cost is occurring right here and some in here. Administrative and sales and operation are fixed costs. Variable cost is here, but we still got to account for it. And we'll talk about that in a second. So construction pricing is cost-based. Service pricing is value-based. Now, what's service? Service construction can still be a service, and to where the type of work you're doing is so valuable to the customer that you are bidding on the value that they perceive, but you still got to know your cost. Construction is cost-based, that you have to understand your costs and have a proper markup to be competitive and be considered for an award. So right now, I'm going to talk about construction pricing, and then I'm going to talk about service pricing a little later. Service pricing will be more in line with probably the creatives. It could be in line with lawyers. It could be in line with some accounting firms. They got this notoriety. Some architect firms who do not bid but are invited to negotiate their prices. So let's kind of go through this and kind of figure this. I'm getting feedback. Okay. So cost-based pricing is about a product. You're going to cost it, then you're going to price it, and that price becomes the value to the customer. Value-based pricing, the customer sets the value. They accept the price. You got to manage on your cost of that product. So as you can see, it's kind of going backwards. A high price lawyer is probably value-based. A consultant that is well-known through the industry is probably value-based. If you are a consultant doing work for the federal government, or a contractor doing work for the federal government or for the state government or for the local government, it's all going to be cost-based. It's all going to be cost-based. So cost-based pricing is based on sales of an individual product or service. The sales price cannot be lowered. We'll talk about that in a second. Each job must stand alone. Every job that you bid, you should be realizing a profit, or you should bid it to make a profit. Each job must be aware of the competitors, but don't worry about the competitors. If you're worrying about the competitors, now you're talking about you're bidding on low bid. And I say, even though construction is low bid, don't think of it as a low bid. You bid your cost with a reasonable markup and go on with it, okay? Accurate markups are calculated on cost-based pricing. Maintain good pay for employees and subs. Why? Because most of your risk and most of your value in construction, or the construction or engineering design industry, is on your employee expertise or your subcontractors' expertise. So pay them good and be fair to them. We know what happens in the construction industry. Large companies do take advantage of small firms, but if you understand this cost-based pricing, you'll never be taken advantage of again. You'll know more than they will know. The biggest thing about cost-based pricing, if you know your costs and you know the competition, and you know the customer, you got to learn to say no, not to go. And that was that bid, no bid seminar that we did a couple of weeks ago. And then doing cost-based pricing and having a job cost format, you'll know which jobs are profitable and what they look like. So this is what I came up with years ago. Cost first, then price. Cost your service, cost the product first. Then let's worry about price. And you said, what does that mean? Well, let's take a look at this chart. This is a cost and price chart of the total contract. The total contract is made up of the total cost plus a profit. The total cost here is the job cost plus office overhead. Job cost is your direct cost plus your job site supervision overhead costs. And your direct cost is made up of labor, materials, equipment, and subcontractors. Now, this is the price that you give to your customer. They don't see all this detail unless it's a federal contract and you are negotiating a contract with the federal government. You better have something set up in this format, and we'll go through that they can pick out. When you negotiate for the federal government, they will want to see the details in each one of these boxes. I had several 8A contractors years ago, and still do a few. And this chart, when I developed this chart for them, they understood how to profitably price and win government contracts, especially when they are negotiated type contracts. Now, these direct costs here, the direct cost is what your customer is asking from you. Job site overhead is that you, as the business owner, you're supervising what the customer wants. So you got to get paid here. The supervision, the support. And we'll talk about that in a second. The job cost is the direct cost and the supervision cost that goes on to give the customer what they want. The office overhead is what it requires from you to manage the whole job or jobs that are going on. So you got to account for that cost. The total cost is what the job cost and office overhead is. That's the total cost of the project. And this profit is your reward for doing it for the customer. And so what the customer gets from you in a bid is this total contract price. When it comes time to negotiate, if you did your estimate right and you looked at the contract proposal and you covered everything that you can, and the customer says your price is too high, the only thing that you can negotiate with that owner is how much profit that you want to put on that job. If the scope of the project has not changed, you cannot change any of this unless you made a mistake. Let's say that you did everything accurate. The only thing that you can change to get that job is how much profit you want to make. If it's 5 to 10 or whatever. So if you had a project that you put 10% on and the owner says, hey, your price is too high, you would tell them, well, let me get back to my office and see what I can do. The only thing that you're going to do at your office is in your estimating program, in your spreadsheet, is say, okay, I'm going to go down to the bottom of my spreadsheet, and instead of putting 10%, I'm going to put 9%, and then you go back to the owner. This is the only thing that you are messing with when it comes to the negotiation, unless they change the scope of work. Say, well, let's take out the so-and-so scope, where you have to do the whole estimate all over again. Just don't take out that cost of that one part they took out. Go through it all over again. And so when it comes to negotiating, if you did it correctly, the only thing you can negotiate is how much profit you want on that project. Like I said, I kind of went through that quickly, but the whole concept of job cost is this right here. And the whole concept of project-based companies is this concept. So the job cost components, again, is material, labor, equipment, subcontractor, other direct costs, job site overhead. Whether you are a contractor or a consultant. Now, remember, the job cost setup in your accounting system, some people call it cost of goods sold. Or in construction, we say direct costs. So the type of cost we're talking about is, again, the direct cost is a 5,000 series. So your accounting record should be set up similar to this, what Marshall and JB and Sandra showed you last week was direct labor, that's the field crew, material, any equipment rental, subcontractor, and other costs. And other direct costs, some people call it general conditions. It becomes a direct cost. And there's it depends on how the owner of the business want to classify it, but the other costs, general conditions, are usually called out in the specification. If they called out in the specification, it becomes a direct cost. If it's not specified in the specification, then it becomes a job site overhead. And here again, you got to read the contract, understand the contract so that you are capturing your costs correctly so that you can apply your markups accurately. So what is indirect costs? Our job site overhead. Indirect costs in construction are these costs that occur because of labor. These costs occur because labor is on the job site. So what are these costs? Well, the first indirect is job site supervision. We'll say it's payroll taxes and benefits, Social Security, Medicare, SUDA, workers' comp, general liability, and the fringe benefits is the insurance, the 401ks, the education, training, vacation, sick leave, downtime. Yeah, you can put downtime in there. And that's another thing that I won't go today in detail. That's one of those one-on-one sessions that I have with company owners about how to sharpen up their estimating and sharpen up their bidding activities. Job site supervision, this is where you put your salaried project managers or anyone that's salary on that project site, and their travel, their truck expense, their communication, anything support equipment, other engineers and consultants, storage, delivery, small hand tools, all that is in this job site overhead, including equipment that is owned by the company. What's on your books are the fuel costs, the oil costs, the repair and maintenance costs, the rare parts and tires. Those you're going to keep up with becomes part of your bidding. And that I'll show you that next week when we talk about how to properly mark up labor and equipment. It's the same thing that we're going through here, but I got to separate it because that's another series of talk that we can go through that will help you in increasing your profits. So direct cost occurs doing work for the customer, what the customer wants in the plans and specification. Job site overhead or indirect costs are costs that incur to supervise the work that the customer wants. And general administrative account is you staying in business. How do you capture costs so that you can stay in business? So all these costs has to be captured. The office rent, the utilities, salaries, the office manager, administrative assistant side, the payroll taxes, the benefit, all this. Everybody understands the stuff that goes on in maintaining an office. When you do federal contracts, I didn't show that, but I'll go on. Let's go back here. We're going to count these. We account for these costs with markups or percentages, and I'll show you a quick way to do that. Looking at a profit loss statement or an income statement for a construction company or a manufacturing company, your accounting software, you should be using accounting software, should spit out a profit and loss statement that looks similar to this. You got an income, you got a direct job cost or cost of goods sold. Total cost, total job cost is total. Income minus the total job cost will give you a gross profit. Then from your gross profit, you subtract your office expense, general administrative, home office overhead, whatever you want to call it. And then if you subtract that, you have your net income. This is kind of standard. This is an industry standard for construction manufacturing. If you are a service company, and more likely, I'm pretty much referring to architect, engineers, planners, consultants, lawyers, that type. You'll have an income. You subtract out all your subcontractors and reimbursables, and you're left with a net service revenue. Then you have your direct labor, it's subtracted, and now you have your gross profit. And then you subtract out your operating expenses, which is again, indirect costs, G&A, home office overhead, is the advertising salaries and all that. Now, these salaries are administrative salaries. These are salaries of the president, vice president that are not doing direct labor, even though they could. They need to be captured in both places if they do direct labor. But this here is what goes on in the office to support the work that's being done by that lawyer or by that engineer or by that architect. And then that is subtracted, this operating expense is subtracted from gross profit to give you net income. I know I'm saying a lot here, just stick with me, and hopefully a lot of you probably already know this, but I want to review how we consult with small businesses that are our clients. What I'm showing you now is what I show a lot of our clients is when the estimator is through estimating, he should create an estimate summary. And his estimate summary should have all the direct costs lined up. He applies a labor burden to take care of the payroll taxes of this labor. And that labor burden is only applied to this labor. Then a job site overhead, you can do it a lot of different ways, but job site overhead does not occur unless labor is there. So a percentage is added on to labor to take care of the supervision cost. Then that is totaled up. Then you got to add a percentage for your general administrative costs. Then you add a percentage for your profit. And then in government contracting, if a bond is required, the bond covers the whole cost, and then that's added. Then you have your total contract price. If we look at what the accountant looks at, the accountant will look at the contract revenues, then the direct costs, so that is subtracted from the contract revenues, then the indirect costs, which we kind of said with those indirect costs, because these becomes actual now. So we're not using percentages over here. This is actual. And then the contract revenues minus direct costs minus indirect costs will give you the gross profit. And then you have your home office overhead or general administrative expenses. That's subtracted out. Now you got income or loss before taxes. These look similar. Look very similar. This is what you should be striving for in your business so that you can compare apples to apples when it comes to analysis of, does my estimate fit what actually happens? If it doesn't, then we're able to make adjustments. And when we job cost things out like that, you'll know what's out of line. And that's another thing that Marshall, JB, and Sandra work with small businesses on, is making sure that job costs are set up so that they can properly manage their business. So going back to cost first, then price is know and understand your job costs, which we said what that was: labor, materials, equipment, subcontract, overhead, job site overhead. Make the estimate comparable to the P&L. And then just remember, cost all these items first, then price. Now, just before we get into some calculations here, when you're in business, whether you have a project or not, you're in business for the first quarter, second quarter, third quarter, fourth quarter, you have a fixed cost. That is your home office overhead. Whether you have a job or not, you're paying your rent, you're paying your own salary. You might not, but you would hopefully have working capital to, pay your rent, pay the utilities, pay for computer expenses and library fees and licenses and taxes and all that. That's going to occur. Once you get the job, the bigger the job, the bigger the job cost, right? The variable cost is the job site overhead. Depending on what size the job is, you're going to have a variable cost of job site overhead. All these have a cost tied to doing business, and they have to be accounted for in your estimate. So let's look at some quick calculations right quick. And this is what a lot of people was waiting on. But like I said, what I just went over in 30 minutes, it's probably a 2-hour presentation. I'm just kind of speeding this up because there's a lot more slides that I have not included in this. But when I say cost first, then price, the cost, then we apply that markup to get our price. I think everybody got that now. Let's look at something people kind of confuse sometimes, margin versus markup. Let's look at a end of year profit and loss statement. You look at your end of the year profit and loss statement and you condense it, to your sales volume of 500,000. Your total job cost was 432,000. The gross profit was 68,000, and your overhead was 62,000. So you have a net profit of 6. Gross margin is your gross profit of 68,000 divided by your sales of 500,000. So your gross margin is 13.6. This gross margin is what you probably see in a lot of accounting software when they run ratios. It's this ratio. Now, markup is your gross profit divided by your cost, your total job cost. So you take 68,000 divided by the 432 job cost. This is what your client wanted. You divide that and you come up with 15.7. We'll talk about that in a second. Markup is a multiplier applied to your estimated direct job cost to cover overhead and profit. Gross margin is the difference between revenue and the total job cost. You might have to refer to these 2 slides for a bit to kind of understand how you need to proceed forward. So for example, using markup to as a percentage of job cost, let's say you estimated a job and you came up with the job like we did in the in this example. Say this is the construction project. When you estimated $432,000. So $432,000 times that percentage, 13.6%, I get $58,752 to add to this job. If I use markup, I'll take that 432,000 times that 15.7, I get 67,997. So let's read this down here. You can see markup is different than margin. If you were to use a 13.6 to mark up your total job cost instead of the 15.7, you would have left 9,200. Oh, made a mistake. Don't pay. You left $9,000 on the table. Okay, everybody saw that, right? You would have left 9,000. Well, what I found out over the years was that a lot of subcontractors was taking their accountant's statement of doing the analysis, and a lot of them over the years was using this markup, and they couldn't understand why they kept losing money, and why the small businesses is the overwhelmingly have failed year after year after year because they do not understand financial management, or they do not apply financial management to their business. Let me hurry on through this. Another application of this is the same thing as looking at your break even. Your break even is going to be your overhead divided by your margins that we calculated before. So your break even sales is 455,888. This break even calculation and some other calculations are another workshop that we'll have that it has to be an in-person. So let's look at this, what we call overhead recovery. The markups are your recovering costs in a way that it ties to job costs. So we're going to look at labor burden, which is payroll taxes, and we look at job site overhead, which is general conditions or supervision, home office overhead, and profit. So let's look at this right quick. This is a sample P&L statement. You got this much in revenues, you got this much in direct costs. Your job costs divided up into burden, and the overhead or the supervision of the job comes to this 177,888. Your total cost of revenue, the total job cost is this direct cost plus the job site overhead cost is 1.4 million. You take that 1.4 million and subtract it from contract revenues, and you get your gross profit. Your general administration for the year is $109,600. So you track that from your gross profit, and you left with an operating profit of $37,000. This other net income could be savings or investment accounts that you have from your business, and you add that. The only thing we're concerned about right now is this operating profit and above. So let's look at a quick example of labor burden. If we take a look at the cost of the annual labor, this is the year-end statement. So the year-end statement, we have $294,645 as direct costs. Our labor burden and fringes during the year was $76,388. Let's go back a little bit. Your direct cost labor is $294,645. The labor burden is this portion right, is this portion right here, this 19,000, this 32,000, and 24,000. That makes up this. So to take care of Uncle Sam, you take those labor burden and fringes, divided by the direct labor. And so you got to mark up your labor 25.93%. For every dollar of labor, you got to set aside 26 cents to take care of Uncle Sam and your insurance. So you're just marking up your labor right now. Let's go to the next. Your job site overhead rate. You take that direct labor again, and you take your job cost overhead. And your job cost overhead is $101,500. Where I get that? That's this total cost here, $177,88. Subtract out what we already did was the labor burden, and I get that 1,015. We do the same, so we take that 1,015 divided by the labor, because your supervision is tied to your labor. You divide it and multiply by 100 and get 34.45%. So every dollar of labor, your supervision costs you 34 cents. You got to account for that. That's how you pay for your supervision. That's how you pay for the computer that's on the job site. That's how you pay for the water bottles that's on the site. That's how you pay for the porta potty that's on the site. That's how you pay for whatever's on that site that's not building the project but support the project. Got to be paid for. It's a cost. Your home office overhead is the same way. You take your home office overhead expenses, which was that 109,600, divided by the total cost input. That total cost input, which is 7.81. Now, let's look at an example. Let's say you got an XYZ project and you estimated labor to be 55,000, material to be 42,000, equipment 6, subcontractors 34,600. So you take this, you got your direct labor, and it comes out to $137,600. You got your labor burden that you got to take care of Uncle Sam. So you take that labor, 55,000 times that markup that we calculated. That's 14,261 that you got to set aside to put somewhere in escrow because Uncle Sam's going to be asking for it. Your job site overhead, which is your supervision, your supervisor, his truck and all that, it's related to the labor that's out there. So you take the 55,000 divided by the markup we calculated, 18,946. So now you got a job cost of 170,808. Now we're going to take care of our home office to keep us in business. We take that 170,808 multiplied by that home office overhead rate that we calculated, and we add $13,340 to our estimate. So our total project cost becomes $184,148. Now we add a profit of 10%. So now the job that the owner won't bill is $37,600, but we give them a bid of $203,000. That satisfies him, that satisfies our employees, that satisfies our supervision, it satisfies our home office, and it satisfies our bank account. That's how you have multiple overhead markup, and that's how it's properly done in the construction industry. And it's kind of this old way. The old way was gathering your costs and say, I'm gonna mark up my job 40%. I've seen this done. I use this example because this is how I used to find people all the time. They calculate the cost, they do the estimate, then they just say 30%, 40%, 20%. It's come up with a number. And they said, my bid is going to be $192,000. But in actuality, you do the new and improved way, and we do just like we did just a second ago, and his actual bid should be $202,000. What I've just showed you is probably one of the main reasons small businesses have went out of business, because they did not apply job costing and financial management properly. And it goes back to this chart. You just remember this chart. Each one of these things have a cost in it and your total price has to contribute to each one of these boxes for you to stay in business. It has to be covered. And to do this, I've created templates to make it easier on folks by, hey, get your P&L, put in your sales, put in all your costs, put in all your labor burden, because this should come straight off your profit and loss statement. It should, to where it's just going from one to the other, one to the other, one to the other, one to the other. Then all of a sudden, here is your markups for all your jobs going forward for the next year, as long as you don't change your management style. Because these ratios are based on your management efficiency. These rates cannot be shared with anyone because they might not manage the business the way you do. But this is how you accurately come up with rates. So how do you apply them? Just like what we did. An example I did for a drywall contractor where I developed this template. You can't see it that well, but you can see where you got the bid data, and the template got the labor. It has the material and the rate. It has the equipment, and has other costs. And then you see where all this is applied down here using these rates. Go straight to here. So now the project will cost $3,500, but he's going to bid $5,200. And so it's easily applied the way, and these numbers and these percentages, they go to the right boxes to add to that price. And it's the same way with the multipliers for architects, engineers, and planning firms. And this is based on Astro publication. If you remember, I had that direct labor, and then you separate out your fringe benefits, and you got your general overhead. And then it's the same thing. It's all based on your direct labor costs. Everything's based on direct labor costs. You can see that 100 there, right? You can see that 100. It's all based on that direct labor. And then you come down here with that 127.62%. That's your markup rate for this particular type of firm. Architect, engineers, lawyers. I won't go through this, but the invoice would look like this. The detail of who was on that project, what's your direct cost that you had on your invoice, and any other subcontractors that you use. But it's all based on your direct labor, because you put in your direct labor. Your labor was, well, I'll have it then. But anyway, the labor was $6,000. You apply that payroll, and that becomes $8,050 that you add. Your direct cost schedule is $696. Other costs, you add that, nothing, it's not marked up. It's not marked up when it comes to architect, engineers, and lawyers. You put the cost in. Only thing that's marked up is labor. And then after you put all your cost in, then you can mark up your fee multiplier, which is negotiated by the state, federal government. This is cost-based. If it was other than a state or federal government, it's a service rate, and the service rate is that even though you might have sent to the government $25,800, if it was a private client, it might be $35,000. That's why you have architect engineers going to private clients as well as the government clients, because the government based on cost, private clients based on value. So the pop quiz is this: why should we perform these calculations? And this is my last slide. I don't know if there's any, I know I went through that quick, but why should we perform these calculations this way? Less money is left on the table. You get more work that your company does well. Your change orders are more profitable. Performance is more easily measured. You're better able to repeat profitable results. You can determine the exact amount to invoice. And when you do this way, the financial performance is more easily seen by the bankers when it comes to loans, or a surety when you're trying to get bonding, or investors if you're trying to get someone to invest or buy your firm. When you can show them all stuff like this, it brings value to you and to your organization. Again, this is a quick overview of markup and profit. The fundamentals are there. I don't care what type of business you have. This can be applied in any business. But it takes time to develop this. If you talk to most companies that we work with, that we went through this, this is probably a 3-year process, because you got to go back and forth until you find that sweet spot that does work. And each company is different. When I showed you those chart of accounts, direct costs, indirect costs, and G&A, that's a suggestion of where it should be, but it's up to that manager to place them so that it is tied to the way they do business. I'll stop there. I could probably go on for another 4 days, Tanisha, but let me stop and see if you got, if there are any questions.
Thank you so much, Victor. I don't see any questions in the chat. You provided a lot of really great information. Would anyone like to come on mic and ask a question? Or if you have a question, you can put it in the chat.
I got all kind of questions. But...
Hello, does someone have a question?
Okay, I'm looking at the someone on the, it says, how would you add your subcontractor invoices to your bid template? Yeah, if you're looking at my bid template, wherever you do, you add up your costs first. You see, this is your labor, this is your material, this is your equipment, and right here is subcontract. You just put their cost right there. You know, you just, who's your subcontractor, what's the quantity and the rate, or you can just put their total cost right there, and that's how you capture that in construction.
Is there a comparable way to do that for professional services, Victor?
Yeah, I mean, it's now professional services is a little different because, you know, like I said, you know, if you look at the invoicing for the professional services, the only thing when you look, now again, this is when you doing state or federal work, excuse me, you can't mark up subcontract. You can't mark up any other cost. The only thing that you mark up is that labor, and that's why that indirect cost rate schedule is very important, that you capture all that cost in this calculation here. The federal government, you have to put it in this format. There's no other way to do this other than what they say by AASHTO standards. And so you got to capture your costs, but when it comes to subcontractors, it's what they invoice you. Now, if you, because most most, you know, architect, engineers, and planning firms, they have a project and they know what level effort that goes in it, and a lot of it's just forecasting. And then that forecasting becomes that forecasting estimate, which probably would look like this, is not an invoice, because you can do this on, hey, they give you a scope of work to do. You can fill this out preliminarily and you manage that design based on what you kind of forecast until you start having a lot of information that you can get better and better and zero in on that cost. Does that help? Or I muddied the water even more?
Well, it's already muddy water because it is something that I know a lot of small businesses tend to avoid because it can be so confusing and so overwhelming. What would you consider to be like one of the very, very, very first steps? It's like, after seeing this now, people thought they had their stuff together and they thought that they were making a profit because there was money in the bank at the end of the month. What would you suggest small businesses do to make sure that they can get through this, as you said, through potentially 3-year process here?
Yeah, that's a good question. What I've seen over the years, as long as I've been in this, is one is to start going to a webinar helps. Second is going to a workshop that is half a day long, that we go slower. Does everybody teach this method? No. Did I make up this method? No, it's in the accounting books. Nobody uses it. Nobody read accounting books. But it's used by the construction industry, from the biggest firms to the profitable firms that are small, that understood construction accounting from a construction CPA. If you went to CPA or a accounting firm that does not specialize in construction or government accounting, they wouldn't know what you're talking about. You have to find someone that is versed in construction accounting. But being where we are right now, I mean, for a a DBE, because this is about small business, they need to contact us, because the most that you're going to get out of this it has to be on one-on-one, where you're sitting across the table from one of our consultants and you got to have your books wide open. Don't have two set of books, because you have two you got to show us the real numbers, because that's where it comes from to be profitable, are those numbers. If you do not have your accounting system set up correctly, we can't really help you, because it wouldn't tell us anything. So the first thing is for them to set up their accounting system in a job cost format, which again, we have the expertise to help do that. And again, because TDOT pays for this contract, it's no cost to the small business. It's just your time and your time doing your homework. We don't do the inputting, but we do all the hand holding and analysis and all the interims to help with that. And even we can even help with forecasting and budgeting, but we can't help with forecasting and budgeting if you don't have the job cost format. So Tanisha, yeah, I mean, it's going to webinars like this, then going to a in-person seminar where we take time to go through this, and then the one-on-one, the hand holding.
Great, thank you.
And this is another thing. Before I talk, when I did this years ago, everybody would ask for my templates, and my templates I do not send these out. These templates are for people that I see them in their eye, and we work with them and we hold their hand through this process, because these templates can be very, very dangerous if you do not have the correct setup on your job costs.
Thank you. That was going to be my next question.
Well, Tanisha, you're a client, so yeah, you get this at no, but you got to do your homework. Remember.
No, I'm asking for a friend.
Okay, all
right. Let's see. Let's see, Miss Audrey. Thank you again, Miss Audrey, for participating today. And actually, was this the workshop that you presented part of the workshop that you presented in Memphis, Victor?
It was a short part of it. Yeah, I didn't go into detail on that. It was real quick. And like I said, the one I did in Memphis was, I flew through it because it was estimating. Mm-hmm. And this is estimating, but much of this is financial management, construction financial management, that we don't do. That'd be a good question. How many people have heard construction financial management? Yeah.
I'm curious to find out if people would be interested in seeing this in a full workshop format before they go to the deep dive with the one-on-one. If you're interested in seeing this go a little deeper dive on this, please indicate that in the chat, and we can see if we can, when we develop our traveling roadshow of workshops. I know this is usually something that you cover, Victor, but just want to make sure.
Yeah.
Okay. Awesome. Thank you. Any other questions?
I know it's a lot to digest, and no question is crazy. When we first submitted this, people have told me, I remember matter of fact, there's a successful contractor somewhere in Nashville, somewhere in and around Nashville, that did not think it would work. I met him in 1999, yeah, some years ago. Yeah. When he came to me in 2010, he said, "Could you tell me what you was telling me 10 years ago that he said, I'd be honest with you, I didn't listen to you and I didn't believe you, but my business is growing and it's out. I'm not sure if I'm big." So we did it. And Marshall and I worked with him, and he said, he told Marshall, I guess part of this year, he said, "I didn't listen to Victor on the way he did this, but it does work." And like I said, I didn't create this. This stuff is in books. I'm just taking what was in books and kind of making it simplified. I didn't come up this on my own. It's there. It's just, we just don't read.
Yeah, I think I can echo that sentiment from the other person. I know we've talked about it several times, and until you really get into it and you start having those expenses and everything and start looking at those expenses line by line, it can be a little overwhelming, but it takes a few times to get this information and to get it in properly and make sure that everything is flowing smoothly. And again, it all starts with your accounting software and having that in order so you can easily pull these numbers and start making your calculations. So I know starting my small business, there aren't many people, if at all, any other people in the industry that I know of who will who would share this type of vital information. So we do appreciate you kind of pulling the curtain back, Victor, and sharing this information with the DBE community, because it is a vital part of you getting pre-qualified to do work with TDOT with your overhead rate and calculating that. So it's important to have this information if you want to do business and be profitable if you want to do business with TDOT. I don't see any additional questions. I haven't heard from anyone else. So either you've blown everyone's minds, Victor, or I don't know, it's just too much for people and their heads exploded or something. Either way, can you give us, can you stop sharing, Victor, so we can
okay, yeah,
do the wrap-up slides, please?
Yeah, okay.
Thank you. I want to thank Victor for providing this information. Again, it's extremely important. And yes, it does take a few times to actually get to understand it. But once you take the time to do it, it'll definitely be worth the while. Next week, we will be in week 6 of this webinar series, and we'll be hearing from Victor again, talking about labor and equipment pricing. This will be extremely important, particularly with all the issues that we're having with workforce and making sure that the pricing for the labor and equipment is on par. Again, all of this stuff is feeding back into your overhead, markup and profit, and everything else that we've been talking about so far. Like I'm the expert, that Victor and his team have been talking about so far. So it's another must see, and you probably want to go back and check out this week's video again to get some of the nuggets, because Victor did drop a lot of knowledge today on markup, overhead, and profit. Next slide. We talked about this. The webinar address is here, and it's also found on your on the Tyler Construction Engineers website. Please join us again next week at 10 o'clock Central for that webinar. As always, we want to make sure that you stay informed with what's happening with Tyler Construction Group and TDOT DBE supportive services, as well as just some of the information that's some of the things that are happening around the city and around the state. Feel free to follow Fairpoint Planning or TDOT on social media websites and websites, just to make sure that you're always kept up to date. Remember, we do have the mail outs that we send out for different opportunities and information that the small business community needs. So please, if you have not reached out to us to get on that list, if you aren't there already, please feel free to reach out. Our post-workshop survey, please take your phone, scan the QR code. The survey will also be placed on the Tyler Construction Engineers website. We would love to get your feedback on this. What did you like? What didn't you like? What would you like to see more of? If there's a workshop opportunity to do a deeper dive that you'd like, if you're ready for to start having those one-on-one discussions with the Tyler Construction Engineers Supportive Services team, we need to hear from you. We want to make sure that we are providing value again to you with these workshops, and make sure that we are providing the information that you need to grow your business. Veronica just put the SurveyMonkey link into the chat, so you can just click on that if you don't want to scan the QR code, but we would appreciate it if you filled out that survey. we'll leave that here for just for a couple seconds, just to make sure that people can see it. All righty. With that, contact information for Tyler Construction Engineers. We have the website. We have the intake form. That is the best way to reach out to Victor and his team. Once that information is received from the intake portal, your questions, your need for assistance, we will definitely route that information to the proper subject matter expert. You can always send an email and even call. So there are several ways to reach out to the TCE TDOT Supportive Services team. Next slide. Okay, well, on behalf of Tennessee Department of Transportation, Civil Rights Division, TDOT Supportive Services Group with Tyler Construction Engineers. Again, my name is Tanisha Hall with Fairpoint Planning. Thank you so much for your time, and I hope you have a great day. Thank you. Bye-bye.